What's up, YouTube? It's Joe Catrapalia again, sitting on the couch, making some money investing in fractional real estate online, or at least trying to. We'll see how this works out. This will be a little bit of a long-term experiment, but if you saw my video the other day, I'm looking at one of the new sites I'm looking at is Mogul. It's Mogul.club, I believe. I'll put a link in the description where you can get 50 free dollars. I have done that and it seems like it's already credited my $50. All you have to do is get on the site, attach a payment method, verify, put your info in, and that's it. I didn't even have to put any money in for that credit to show up, which is nice, and it happened right away, which is different from some of the other sites. Some of them it takes a while for that to show up. But I've gone through that site a little bit. I feel pretty comfortable with them, although it is very new. They only have a few properties that are already up and running. I think April of last year is the first month that they paid out a dividend on anything. And then, they're starting to, it looks like, consistently do that for properties that they have up. Um, one of the ones that had caught my eye right away was this Axelrod. It's one of only a couple that they have available to invest in at the moment. It's a short-term rental in Houston. It happens to be a duplex, but they're running a special right now. So one of the things that makes me a little skeptical of them is they are very salesy. They booked a sales call with me. They, focus a lot on the returns and the pedigree of their founders, which I think is interesting. I realized after looking at their LinkedIn, they really push the fact that they're, Goldman Sachs, ex Goldman Sachs employees that started this, which is true, but, they both worked there for less than a year and a half. It looks like oh no, they worked there longer, but they worked in the real estate group. It looked like less than a year and a half. It looked like worked at the company maybe 3 years or something. You can look each of them up on LinkedIn, just like I did. And, whether or not that's accurate information, who knows? But so real estate it has very long cycles, right? And so being an old guy in this industry, sometimes I, question the real experience level of someone who hasn't been in the business, say 15, 20 years at least. Really, if you've been in 15, you really haven't been on the wrong side of a down cycle yet. You have to go all the way back to 2008, and have bought before that to really have been hurt by it. I started investing in 2005, and I also started working in commercial real estate in the December of 2006, and so really get to see the downside that we went through, and I think that a lot of people lack some of that experience and don't even understand. It makes it tough to fully grasp the risks of some of these deals. Short-term rentals, although they've been around for a long time, the way they are today is relatively new as well. I think Airbnb might have started in 2008 or maybe 2006. I'm not sure, but they haven't been around that much longer. And so, this is relatively new business. Mogul itself is very new. Like I said, I mean, they only have a few properties up and running, but they seem to be picking, at least from the research that I've done so far on these properties, they seem to be doing a good job picking properties. Whether or not they're able to execute on the plans that they have is yet to be seen. But I liked this one, and they're, like I said, I mean, they're extra salesy. So they gave me the $50 bonus for signing up, and then I get this email that says, "Hey, you buy $5,000 worth of this property, and I have another day left on this. If I do that, I get a $250 bonus credit towards this other property that I was also looking at and thinking about putting some money in anyway." So, if you look at that, if I just put 5,000, I'm getting an extra 5% immediately for doing that, and that's on top of the $50 they already gave me. And it's a property that I think I like, but I'm going to spend a little time doing some due diligence on here, showing you what I liked about it. And then they also have this, no losing money your first year guarantee, which, I think it's really tough to say, like, did your property really go down in value? So I don't know how real that is, but it is, they're doing all these things to sort of entice you to jump in, and they're doing it because it's a new, um, they're a new company, so they've got to do something. So I don't, I'm not really hating on that too much. But so, I jumped in. Oh yeah, you get up to 10,000 in bonus investments if your property, if your next investment loses value in the first year. So receive up to 10,000. But so this is the property I'm talking about. It's the Axelrod. Like I said, it's a duplex. It's being run as a short-term rental. It appears you have to rent the whole thing together. One of the things that I don't think that I was clear on when I did my last video, if you haven't seen that, I'm going to link that below as well. Just sort of give you an overview of Mogul, is just what fees they charge, right? And it's basically 5% of your purchase price, three broken up in 3 and 2, and then 2.5% of rental income, um, on top of the property management company that gets paid. They have, it appears, what negotiated. It looks like they negotiated really good rental rates, and so, or management fees, and so that 2.5%, I'm really not that mad at it, because it seems like they actually did do a good job of getting a really low management fee. Now, whether or not they have a good manager at that low management fee is yet to be seen. They did, I think, just a couple months ago, change manager. So we'll see how that works. But so when you go on their site, one of the things I want to point out, so they have this. This is the property page, and this is where you buy it. Then they have this separate analysis tab, and that's where you can get, a little bit of a deeper dive into the properties. I'm pretty sure I showed this overview in the last video, but I think that it is, you can really dig into what they have going on as far as, all of their different assumptions. I think I had mentioned, I thought this miscellaneous cost was a little bit light, or that they don't, it's not clear, is this repairs and maintenance, right? Because it is just $1,000 a month. It's definitely not, there's no capex reserve to speak of. I think that they're just lumping that into miscellaneous, and then maybe it's a little bit light, at $1,000 a month. This is per month. This is a little confusing how they set this up, because they have some of these per month and some per year, in this same section. But I mean, I figured it out. I'm sure other people would too. This is where they show, where your property management rate is. All that I think is pretty well and good. I think their math seems to check out when you do it. And so I just wanted to check a couple of things. They give you the full purchase contract. You can see everything that is going on. There's a little bit of a discrepancy. This says they're buying it for 1.2 million. When you look on the actual page, they're saying they bought it for, or they're buying it for. And I'm saying buying because it looks like it wasn't actually closed yet. 1,063,000. My guess is what's happening is they negotiated down at some point during the due diligence period and just haven't provided us with the amendment for that. I don't know for sure that's what's happened. Honestly, from the math that I did and me looking at it, I don't hate it at 1.2. And so, I'm not going to wait to find out if that's what they did or not. I'm not going to put a ton of money into this. I'm going to just do that. It's going to be more than you've seen me put on other properties on other sites. Part of the reason is because Mogul doesn't have very many properties. And so, for me to put any, real amount, if I try to do 1,000 per property, like I was trying to do on Lofty at first, it's going to take, maybe a year before. I mean, I don't know. I don't know how many they're planning to put up there, but it would take quite a while to do that. And so, seems they're providing the bonus for doing 5,000 into one. I think that's what I'm going to do on this one. But let me just, and remember, just because I decide to do that does not mean that I'm recommending this for you. Your risk tolerance might be different. Your situation in general is, and so, just keep that in mind. Even though I like this one, and I think I'm going to show you why, it doesn't mean that it's the right thing for you to invest in. So definitely do your own due diligence. They provided the full property inspection, so you can go through here. There isn't any, or there aren't any details about if if they negotiated any repairs or anything like that. But you can see in their budget that they have reserves and closing costs. Uh, you know, maybe there's some money in here because it's a really high number, right? 114,000. Yes, they're having reserves in the initial offering, but maybe some of that is also going towards some repairs. It's not super clear, and I think a lot of these sites, um, it's tough to figure out certain things. I guess one of the things you might be wondering is like this one doesn't seem to have much of a track record at all. It doesn't, and it is providing a little bit less due diligence in the way of documents. This one is because it hasn't been purchased yet. So we have the contract, we have, um, the inspection. They do provide the operating agreement, so you can see that and see how the fees work and ownership and voting. But one of the things that I've just liked by looking at all the properties is I don't think that they're really not just going for volume. They're not, it's not like Landa or Arrived. Both look like, although they say, they're really trying to pick markets and pick stuff, they very much seem to be buying these generic properties that don't seem to be anything special and also don't seem to be spitting out a decent return. Where at least if they're these, that Mogul's numbers are correct, this one should be doing pretty well. Pretty high cash on cash. Um, Even better, it's some equity multiple. That's if you believe their growth story. But let me show you a couple of things that made me think they're doing pretty well. So this property, it was listed for 1.3 million. So they're negotiating discounts, right? You can tell not all of the platforms, a lot of them are not, you're basically getting the properties at appraised value and plus fees. And so, yes, Mogul does have, a decent chunk of fees added on top. Mogul, and did I say Mogul? But, even when you add those in, it's getting you close to, um, that what at least what the asking price is. So they did do some work to actually try to get a lower price, and then it appears that we're getting it below this estimate. Now, is it just a little bit below at the 1.2, or is it significantly below at the 1,063,000? I'm not sure, but I think even at the 1.2, I don't hate it at all. I think that it's pretty nice, especially considering it's operating. I'm going to get into that in a moment. It's already furnished. If you look at their Redfin estimate, if they are still paying the 1.2, then they're paying a little bit over that, but still significantly under the list price. If it is, so it's not clear. It's something I'd like to get an answer to before I put any money into, but I realistically don't think I would, because I think I just have a day left to get that extra 250. I think honestly, either way, I'm still pretty happy with it. And I looked on it on homes.com, and I don't think I actually found. Sometimes when they're listed, they don't put their estimate on there. But then did my also the regular due diligence, and so checking out the flood map. This is really important when we're in Houston. I lived and worked in Houston for a while, for maybe 18 months, but this was 15 years ago or something. And so, I don't know this market really well. Um, but I do know you definitely have to check the flood map there. It's glad to see. Looks like we're pretty safe from that perspective. Um, I went and looked it up on the Harris County uh, tax assessor's website. Obviously, we're paying way more than the appraised value. That's really common in Texas. These values, they rarely match up very well with actual prices. Now, this is a little bit scary, right? That's a huge jump. Um, but sometimes it's just that the appraisers are really slow to pick up certain parts of the market. So I don't really put a lot of stock in these appraised values on the county websites. It doesn't mean that you should ignore them, but it's something, what I usually look on here for So I want to verify the owner, right? And this is actually who's selling it to Mogul. Looking at the living area, making sure that this matches up with what was in the listing, right? That's important. Making sure the property is described the same way. It's a two-family home. That's the sort of stuff that I'm typically looking at on here, making sure that your built matches up, that sort of thing. I thought it's interesting that the pool is pretty new, and so that's a nice. I don't know if I showed you all the pictures yet. Well, you can see them right there, right? Like it's a really nice looking pool. Fills up basically the whole backyard, which is great from a maintenance perspective. And it's really all you need in it. And if you have a Airbnb anyway, so I feel reasonably comfortable with the value they're paying, especially if it's the lower of the two. But again, even if it's the 1.2, it's not a crazy price to pay. I don't think by any means. I did, look at the street view, spent a little time walking along there. It doesn't look like it's an incredibly nice neighborhood. It looks like there's, this is from 2 years ago, so the neighborhood's changed a lot, I'm sure. This is the property before it was, repainted. So one of the things when you look at this, you don't know if any of this is still the way it is today. You can see there was some new construction happening 2 years ago. I would guess there's even more, whether this, if I were going to spend a lot of money on this property and I was going to buy, um, a significant piece of it, I might want to even drive over here. It's a couple hour drive away for me, or get someone that I know that lives in Houston to do that, right? And give me a little bit better idea of this area. Because this doesn't look amazing. But again, I'm going to jump to this. This is what one of the things that made me feel good. I found this property on AirDNA, which is a site that pulls all the Airbnb and VRBO listing data, and so they have the last 359 days of this property operating. So not a full year, but very close. And in that time, pegged their annual revenue at over 200,000. And then said, okay, if we had those 6 more days, we'd get another 3,000. That's pretty interesting. Um, and so one of the things that I always like to do is I like to look at the revenue, compared to the price. And so if you're still, even just even, right, like 200,000 divided by, if we're paying the 1.2 million equals, we're talking about almost 17%. I like to be close to 20. This is, normally if I'm looking at a property, I think this is a little bit low, but that's because I'm also adding in the fact that we typically have to go buy furnishings. And so if it's already furnished, which this is, they're buying it fully furnished and operating, then, often for a property like this, we probably spend another, between 50 and $100,000 getting it all set up. And so, 0.16, almost 0.17 is pretty good. And if it ends up being on the lower price, right? Let's see, 63. Then you're talking 19% almost. And so this is what's really got me, right? Like if they're able to maintain the performance that it's already experiencing, um, that's it's a great proof of concept that they have in place that you just don't get when you buy a vacant property and try to turn it into your own short-term rental. So, one of the things I always wonder about is like, okay, is this neighborhood going to cause me problems, right? Well, okay, I think that we know that it's already operating there, right? Now, one of the things I meant to find the Airbnb listing for it. Let's see if we can find that. So I think that we can. It's not gonna be too difficult, right? Let's see. Let's say Houston, Texas. Uh, we want to have, let's see, 12 guests. This is gonna This is going to really narrow it down quickly when you put a lot of guests, because you don't always have a bunch of properties like that, or you don't have a lot of properties that can do that. That's not it. Let's zoom in a little further. Oh, they might have taken it down. I'm sure I would bet they've taken it down because it's, oh, well, okay, let's see. Let's see. Let's look back at this map and see if we can get a better idea. Because maybe they didn't. Maybe they didn't take it down because, okay, let's see, right by Texas. Southern, was I even looking at the right spot on the map? I don't even think I was close. I wasn't even close. Okay, let's see. Somewhere around here. What is that? What is that road? That to be labeled better. Um, hmm, zoom out on this. Let's get rid of this view. That might help. Okay. Straight down, 281, and then that is 90. Let's, and this is, if you don't know an area at all, that's what you gotta do. Just try to get around. Okay, now that's starting to look a lot like what we're looking at. You see, okay, there is a lot of stuff over here. That doesn't look like it. That doesn't look like it. All right, let's zoom in a little bit. Okay. Yeah, so maybe around here. Bam, there we go. Okay, we found it. That's all you got to do, right? I mean, it's pretty simple stuff, just a little time consuming. Okay, this is awesome, right? 4.94 with 48 reviews. One of the things I like to do is look and see, is there a common bad review, right? Okay, so, but I mean, they hardly have any, right? The bad reviews are a 4. Um, Location gets a 4.5, right? That's what we were talking about when I started saying, hey, let's look at this. Let's lowest rated. Overall great stay, well kept, cool. Time to enforce at 10 p.m. Conclusion and the hot zone heat. So 0 complaints. There's 2 things. Okay. It's exceeded all expectations. Perfect location. Area and location of the place wasn't great, but I stayed at other Airbnbs and it's usually the same. Location was not great. Never felt in danger at any point. See, this is good to know, right? The house made up for the location as advertised. Yeah, fantastic, right? I mean, and that's it. Those are the only. So, one of the things, we have properties that we operate here in San Antonio, and no matter what you do, you can't overcome a bad location. And so we'll have some that just like every review will be like, oh, it was great, but I felt like I was going to get stabbed. And it's like, well, that's tough. And so, when I'm looking at a place and I'm not completely sure about it, from doing the street view. That's one of the things I really like to see, what the reviews are. They also can tell you like if there's a flaw in the house that's going to be tough to fix. You can see actually here, this is paved versus when it wasn't. So that's another thing I like to really figure out is there plenty of parking, right? If this is gonna have 12 guests, can we put 4 or 5 or more cars? And it looks like that we can. Um, do they have street parking here? Looks like there's street parking as well, so you can have some street parking and then a bunch of tandem parking, because tandem parking is not great. Um, but with all of those things, the fact that it's operating, it's already bringing in income. It looks like our estimate's pretty good. I really like the Houston market. That's one thing, most of the time I'm pulling up market data, and let me show you. Might as well do it, right? Houston, Texas. Just so you can see why I'm a fan of Houston. It's no San Antonio, but it is. Uh, there's a lot to like about it. What is that map? I don't know. Let's look at this. This is we always look at first, right? Is it a growing market? And we had 20%, 7.5, 9.6. So it's growing. And one of the things is it's in it, a small growth in the last 3 years. But one of the things, it's really tough once you start to get to a city of this size to continue growing, and it still is. And so that's a really, it's one thing to add 100,000 people, or 100,000 people in 10 years. But when you're adding 200,000 to get to a number, or like the smaller your base number is, the harder it is. And so then we look at the city itself, but then we're also going to look at, um, let's see, do we have fifth most populous MSA? Oh, that just gives us the definition for that. So what is it called? Greater Houston Metropolitan Area. And let's look at the numbers for that. Oh, and you can see even crazier growth, right? Like, I mean, we've got 26, 41, 20, and 5. And I mean, so obviously the metro is growing faster than the city itself. I think that's really common and with a lot of cities, but it is, especially when I'm looking at what do I want for an Airbnb? Like, if the market is growing as a whole and people are coming to visit, they're typically going to want to come in to visit in the city versus, outside where the growth is happening anyway. And so, I like that. I think it's a good indication of, where the future of home prices should go. And that's another thing that we always look at, right? And I didn't have it pulled up. Houston. So I think this is usually how I get that up. Okay, we have a little bit of growth this past year. And, we've seen this trend a bunch of times on videos, but you did have a little dip, but it's been pretty evened off. We've got a little bit of a down right here. But it's much less pronounced than a lot of the markets we've looked at lately. So Houston's just a spot where I'm really happy to own something. So let's see how tough it is to actually go through and buy something on here. You can see I've got my $50. I actually emailed them to find out how the bonus works because I couldn't really see anything other than that email. And they said, oh, it's just going to show up if you buy it. And so I'm just trusting them with that. Obviously, that's especially with a newer company, a newer platform like this. That's all you can do, right? Like, it is a little bit of blind faith. And I'm going to do 5,050 because I want to have it count my $50 gift certificate, and I just want to make sure that it doesn't count against me because I don't know if I'm using that as part of it, if I'll still get the bonus, right? Because it's got to be at least 5,000 invested. Let's see. Oh, what's happening there? Trying to go back to that email, right? If you invest a minimum of 5,000, get 250 in bonus credits. So I wanted to make sure that I'm actually investing 5,000, and so I'm putting the extra 50 because 50 of it they're just giving me. I don't know if that makes sense. Pay with credits. Yes, I'm going to add the credit, and I've got my USAA account already attached. There's going to be a processing fee. It's just $4. Actually really like this, right? Like, some of the platforms have just crazy fees when you're buying and selling. That's not the case here. It's telling me this is one of the Mogul backed investments. So I'm going to just hit confirm and allocate and see what happens here. This may take up to 2 minutes. Well, I was not prepared for that. Oh, look at that. Congratulations. Order confirmed in 3 to 5 business days. The funds and shares will settle in your account. Your returns start from the time of investment. So now. All right, open dashboard. Okay, so now I'm invested in one property. Awesome, right? So, and this is one of the cool things too, is I like how it seems like this is set up, and I won't really know until, and so you get the option to auto invest dividends too, right? Or automatically reinvest into properties. I'm not going to do that right now because I'm going to do some due diligence on every potential property. But yeah, so that was pretty simple. Obviously, this is a long-term experiment, right? It's going to take us a little while to figure out. And so this is the roads. This is the one that I think I just got a bonus $250 in. This is one that's set up now as a what's that called? As a pad split property, which is rent by the bedroom. They didn't have it in the analysis tab yet. Um, so I didn't want to just go and buy that one outright yet. So now I should be getting $250 worth of it. Once it's up and I've done some due diligence, maybe I'll buy a little bit more. Because, I think I've got to have more than one property over the long run on this platform to be able to give you a real good idea about, whether or not I like it, how the returns work and everything. So anyway, um, just as a reminder, just because I'm investing on here doesn't mean it's the right thing to do. I'm really trying to do this as an experiment. Share the info that I have about as far as my knowledge on actually looking at the properties themselves and give you a couple of tools that you can use. And also just really encourage you to do that off-platform due diligence that we just did, right? Like, and probably more. I'm trying to keep this short. I spent a lot of time looking at this before I got on the video. Um, but you want to do that, and yeah, I'm just really, I just want to make sure, it's really clear. Like, um, I do feel like on all of these platforms at the moment, I'm still experimenting. I think that there's definitely money to be made on some of them and some of the platform or some of the properties on some of them. But it's going to take a little while to figure out like where that really is. And I think right now on Mogul, they're trying to pay you to take that risk, right? They're giving you some bonuses, they're giving you some additional guarantees, and I like that that's what they're doing, but it could all go sideways, and so maybe this was a big mistake, and I'm never getting that $5,000 back. You'd never know, and so I don't think that's the case. That the due diligence that I did, I feel pretty comfortable with it, but definitely do your own. In any case, until next time, I'm going to just keep making mistakes so that you don't have to.